Well, we're continuing our coverage here from the World Economic Forum at Davos, and joining us today is Chanda Kochhar of ICICI Bank. Chanda, appreciate you joining us. We get you on a day that the government has finally announced the details of its bank recap plan. Do you believe that this is going to sort of give an impetus now to the public sector banking space?
Well, I think it's good because, some substantial amounts of capital have been announced for some banks, and also the time period, that is by 31st March. So I think it's good to take away the uncertainty, to have substantial amount of capital committed. And then along with that, of course, some governance, rules have also
What do you make of that?
Well, I think it's about saying that banking has to be done in a particular manner, and it's good to remind the whole set of banks, so to say that follow certain common guidelines, when there are breach of contracts and so on. So
isn't that standard hygiene stuff?
Yeah, but it's sometimes it's good to remind yourself and good to make efforts to kind of implement. It's the things that we normally treat as common sense and take it for granted. I think it's good to focus on them, and this is the time to focus on them.
So as a private sector banker, in light of the recapitalization, do you believe that it is likely to change things in any way at all, at least in the near term?
I think this is something that was the basic hygiene that these banks needed for arriving at a certain amount of capital adequacy by 31st March. But the good part is, as I said, it's a good number, it's a substantial number. So it gives these banks, the comfort that they can continue to keep participating in the banking sector. So in that sense, I think it's, as we are as a banking industry working towards, one, capitalizing the opportunities on the retail growth, and second, working towards resolution and recovery of some of the larger cases, I think having banks that have enough capital makes a lot of sense.
Since you talked about resolution, do you believe that 2018 is likely to be the year that we see resolution actually take place? We've seen interest, at least as far as some of the distressed steel assets are concerned. Do you believe that it's largely going to be restricted to any particular sectors? And do you really see resolution taking off, at least in the first half of the year?
Yes, I'm very hopeful that actually you should see resolution taking off. In fact, I think, we as an industry and all of as a country have spent a lot of time talking about recognition. We should now focus on resolution and recovery.
Is recognition done? Have we been able to resolve the recognition part of it, or do we expect any more skeletons to tumble out of the closet?
No, I think the stress is known. That stress, part of it may have been as NPA currently, part of it may be as assets under watch for various banks, and it's a matter of time how they get recognized. But at least the estimate of what kind of stress exists, I think that is done. But we should focus on resolution and recovery, and I'm quite hopeful the way we've seen progress in some of the larger cases, at least, and the kind of interest that we've seen, that at least we'll move in certain time-bound manner. Yes, what kind of recoveries will happen, that those will vary from company to company, whether it's an operating company, non-operating company. But I think this year will set the benchmarks of how resolutions take place to a lot of assets.
In terms of timelines, the SBI chief yesterday in his conversation with me said that in terms of the first NCLT list, he hopes that by March or April, we should expect some degree of conclusive action. What would your estimation be?
Yeah, I would agree with that. Actually, in fact, it was in this quarter that we should have seen some conclusive
But we've got the deadline extended.
We've got some extensions. So, yes, if not March, by April, around that time, we should see the ball starting to roll.
Okay. In terms of vulnerable sectors now, and steel is a sector that is rebounding. This was a big concern area for the banking system. What is the new Steidle today?
No, I think, the country is kind of looking at sector by sector and trying to resolve and arrive at what needs to be done around the sector. So as you say, steel, I think, a lot of the policies changed, the minimum import price and so on, and various other things which have ensured that the steel industry capacity utilizations have gone up, profitability has gone up. So we have to look at sector by sector and try to
What's looking vulnerable today?
Well, it's a known fact that, there are various power projects that are kind of half implemented, so we still have to work through resolutions on those.
One of the other issues that's being red flagged, at least by agencies like Moody's, ICRA, etc., is the affordable housing segment and the delinquency rates expected to rise there. You've got, what, about 6,700 crores of an exposure to that segment. Is that something that you see as well?
I think, first of all, this is a segment where the growth has just started. As the investments in affordable housing comes and as these affordable houses get built, I think the growth here potential is huge. But in every growth area, we have to make sure that we do our due diligence and then undertake the business and take part of growth. So as far as we are concerned, we've actually so far have had very good credit experience. I think, we are not seeing a cause for worry. But the basic principles that all of us will have to follow is that even this lending should be done on the basis of earning capacity and not just on the basis of the fact that someone is buying a house, so the money has to be lent. I think that basic principle of banking, that lend against cash flows and lend against earning capability and not just the only the monetary value of the asset.
Let me ask you then, in terms of credit growth, what the picture is looking like at this point in time. Do you see a significant upturn? What is your expectation?
So if you look at the numbers as well, the year began with very low banking credit growth, but it's picked up, substantially, and now it's showing up as about 12% per annum. Within that, if you look at the consumer side of the growth, it continues to be healthy, above 15%. The industrial side of the credit growth, which had turned negative at certain point in time, has at least turned positive. So I think these are the positives. As far as we are concerned, our domestic business is growing at almost 18%, within which retail is growing upwards of 20%. So we are seeing healthy growth actually coming back. The growth on the corporate side is really more related to increased capacity utilization, is more related to the medium sector industries who are getting their contracts out of the government spends. So that's where the growth is coming from.
Do you expect a significant revival now in private capex? Because that's the hope and the expectation.
See, again, as a country, when we look at private capex, we are all used to looking at only a few mega projects and investments in a few industries across mega projects. I think the structure of the economy is changing. Currently, in fact, with so much of government spending, the real spends and investments are coming in those sectors who are getting the government contracts. So on roadside, the construction companies getting the contracts. On railways, the private partnerships, that are playing a role there. On laying of tracks, on railway stations and so on. So that is where investment is coming. So we're not seeing those big, large mega projects, but that doesn't mean that on the industrial side, the activity has not started.
Let me get you to weigh in on the current debate, which is back on the table now, and that is whether 100% foreign direct investment in the banking sector should be allowed or not. It was something that was toyed with in 2015 as well. We understand that it might be discussed, but if at all it is, what's your thought?
I've always believed that the more freedom you allow for capital movement, I think finally it actually shows up in the buoyancy of the sector. So I think we have to look at capital flow in that. So that's the positive of it. And in fact, if you look at the banking industry, there are anyway checks and balances in terms of who can take ownership. RBI has that not more than 5% in some form and not more than 10% in some form. So I think that
Uday Kochhar says we're not paying attention to proxy advisors.
Well, but I think there are a lot of checks and balances built in. So as long as the checks and balances are properly implemented, I think more and more freedom and movement of capital always brings efficiencies and buoyancies.
You've been part of the meetings that the Prime Minister had, the dinner meeting that he had with investors. What's your own sense? They know the India story, most of them who met with the Prime Minister. A lot of them are already invested in India. What was the specific ask or expectation beyond what the government has already done?
So you're right. They know the India story. I don't think they were asking about whether there's a demographic dividend or not and whether there's a market for their products or not. But I think, what I took away from the meeting was this comfort to say that many of them they may not have said it in exact words, but I think the feeling was that there were certain expectations and there were certain promises, and we see that gradually more and more of those promises are getting delivered. So I think that confidence building, that, things are moving in the right direction, I think that's a big kind of, applause from them. Well, of course, the ask always is that what you're doing, continue to do more and more of that. So, but the fact that, yes, we've moved on the ease of doing business, and it's not just about numbers, but one could get a sense from them as well that they are seeing that impact. I think that's the positive part. And then, of course, the expectation is that we should keep doing more and more of that.
So let me end then by asking you about what you think the budget is likely to deliver on, and whether the fiscal deficit target of 3% for next year is going to be, something that the finance minister sticks with, or do you expect and anticipate any slippage?
I, in fact, think that nowadays it's not just the one budget day that makes so much of a difference. I think the country is going through some various big structural transformations on a continuous basis. So in that sense, I think it will be a continuation of so many things that we've spoken about. The formalization of the economy, the financialization of savings, I think would continue. But of course, that's not a part of the budget. But everywhere where the investments are either a priority for the nation or investments that create employment, I think those would find focus, whether it's agriculture, rural economy, affordable housing, and so on.
Well, Chanda, always a pleasure. Thank you very much for joining us here in Davos. Cold hand, sorry. With that, it is time for us to wrap here. For now, I hand it back to you guys.